everybody, and welcome to the first of the 2021 webinars from Digitise. Some of you may have attended our webinar series from last year, where we spoke extensively about the different dimensions of the pandemic and how it will pan out from an economic standpoint. Today, I'm very excited to introduce a new topic, what we call the Intelligent Affordability Service, speaking about the latest and greatest in affordability across sectors and lending. It is also a new service that Digitise has launched in partnership with AccountScore. Now, affordability has always been very high, and assessing it accurately has been very high on the priority of all lenders across sectors. But modernizing affordability has become an immediate and an increasingly must priority for most lenders, not least because of the impacts of the pandemic and the crisis, but also the FCA coming out with stronger and stronger guidance. Now, a recent survey showed that although 72% of lenders say that they have a social responsibility towards preventing customer overstretch, unfortunately, there's only 1 in 5, which is about 20%, who believe that they can detect impending financial difficulty. The FCA, as of December 2020, said that there were 4.1 million people in the UK who were in financial difficulty, and they've sent out some pretty strong recommendations to guide lenders to achieve the right balance between showing forbearance to customers and lending to them to generate income. And so this becomes quite a complex task for most lenders. The classic obstacles in modernizing affordability, obviously, are constraints like GDPR, where capturing data around prospects and customers is much more tricky, and applying them to underwriting is tricky. The uncertainty around how incomes and incomes across different industry sectors because of events like the pandemic and like Brexit have changed, so historical trends do not always apply. There is a significant cost in adding additional processes and resources to improving affordability at a much more granular and detailed level. And last but not least, the technology till today wasn't really there to be able to assess affordability at a level that really allows lenders to achieve that balance between forbearance and income. So in order to discuss the importance and the must-have priority of the Intelligent Affordability Service, I'm very excited to introduce our panelists for today. In no particular order, David Robinson is a financial services leader with over 25 years experience in the UK residential, buy-to-let and specialist mortgage distribution. He has extensive understanding of mortgage distribution and has also, given his background in regulatory understanding of the FCA and the PRA, represented lenders in multiple trade bodies, media, and other forums. David, we're welcome.
Thank you.
Next we have Emma Steele, who I'm extremely excited, and Emma, congratulations on the fantastic work with Equifax, who's the CEO of AccountScore. Emma has spent the last 15 years of her career in the ever-changing consumer finance sector, and she leads with an instinctive, savvy intellect, and I can vouch to that given all of our conversations during our partnership, that she has a keen instinct and an understanding of how affordability will set in the market. She was responsible for all the key priorities at AccountScore, joining at its very inception in 2016. From the partnership with Equifax, the implementation at HSBC, and taking account score to markets outside the UK, such as the US and India. Emma, welcome.
Thank you. Great to be here.
And last but not least, we have Madhav Sadalgekar, who's probably today going to be the voice of the customer, being the first client to really implement the intelligent affordability service. Madhav is very experienced in the financial services technology realm, with over 23 years of experience in retail and consumer lending. And hopefully his experience of implementing the intelligent affordability service, we will gain keen insights as to how to leverage data and technology while looking at affordability for merchants in the consumer, in the commercial and the SME lending sector. Madhav, welcome.
Thanks, Arvind.
The structure of the webinar that we're going to follow today is that we're going to have 3 rounds of conversations around 3 broad topics, and I'm going to lead with 1 panelist at each round. And at the end of each round, we're going to request the participants and the attendees to answer a 30-second survey on the feedback on the round. And then hopefully we will have about 10 to 15 minutes at the end for questions raised by the attendees. So just leading with that, I think the first thing that I'd like to talk about and really hear from the panelists, and David, if I may go with you first, is really talk about the current challenges that you've seen in the industry around affordability assessment, and especially with the view on mortgages. What is the practice? What is the state of practice and the state of challenges?
Well, I think to start with, as I think you've referred to in your introduction, Arindam, affordability, income, expenditure assessment, verification is absolutely at the top of the priority list for lenders. Lenders have got many, many priorities, but affordability in the whole customer journey really piece is a really key priority. It's important for lenders, it's important for advisors, it's important for customers. From an advisor point of view, it's a crucial aspect of the advice process for the customer. So it's a real key priority. It's always been one of the most manual and time-consuming aspects of the whole customer journey, loan origination piece. Not only is it highly manual, it's actually quite non-standard as well across lenders, and that in itself is one of the challenges that affordability has in the whole mortgage journey, in the whole mortgage sector. Every lender can approach aspects of affordability, both income and expense verification, in a different way. So it creates a huge amount of challenges at every part of the journey, particularly at that upfront stage. And at a time, I'm sure we'll touch on it in terms of the impact of the pandemic, but even out with the additional challenges that the pandemic has brought, I think the whole process of income and expenditure verification has always been a real key challenge. One of the other challenges around it is that an awful lot of the income information is embedded in a whole variety of different documents and verification documents. So that in itself adds significantly to the process. So those become some of the real key challenges that you face, both as a lender and as a customer and a broker in the whole process.
Absolutely, and just to touch upon some of the things that we're hearing from lenders in the because of the pandemic, being able to scrape information around how industry is going, being able to look at how income is going to get projected, given the layoffs that a number of organizations are announcing, being able to factor that in just adds manual complexity into the entire task, to be able to say so while credit worthiness is past and present, affordability is more present and future, and being able to assess what that future is going to look like is quite challenging. And I'm going to sort of bounce off to Emma. Emma, you're probably seeing this a lot in from an account score and the use of open banking in the space.
Yes, absolutely. And, we set up Account Score, 5 years ago. And this time last year, when pandemic was first landing in the UK, at that point, we were at around about 80 clients, and that covers, from SME lending, consumer lending, right through to working in the mortgage space. So right across the financial services spectrum. And actually over the last 12 months, what we've seen is that acceleration in the digital transformation, because people had to become more efficient and effective more quickly, and they didn't have a choice. So they were kind of forced into that. So, we sort of, I sit here sort of today with now sort of like over 180 clients with people adopting open banking and accelerating it. But what is fundamental through that whole process is you have all just having open banking data doesn't mean that everything is solved immediately. You have to have those. First, we have to have that respect for the process that has been in place for a long time. You coming along as a fintech and saying it's okay, we've got this, and we're going to just deliver this solution for you. It's not just a one size fits all solution. As David was saying, lenders, the way they look at income verification is different. The way they do the income and expenditure and the weightings they would apply, they all have different risk appetites. So, what needs to be ensured through this is, yes, the open banking is an absolute enabler to moving towards the digital transformation and giving those efficiencies. But it needs to have that flexibility in it, respect the processes that are already in place, and really deliver in that guidance. And you have multiple challenges. Where you're touching on, okay, right, so how does the deployment actually work? How does that technology deliver? And I think that is at times the most challenging thing, getting the deployment, when if there are organizations that have never seen bank transaction data before, it's not like working with a bureau. You can't just do a retro and say, oh, this is going to be okay, and so you have to take this staged approach, and it's about working in partnership with the clients to be able to deliver the solutions that they need for their organization.
Wonderful. And to bring this all live, Madhav, from a decimal factor, and when you implemented this, so what were some of the biggest challenges you were finding before you implemented the service from an affordability standpoint?
Sure. So I think when I got in the whole SME lending industry, when you look at the number of SMEs and the organized and unorganized elements that they exist in sole traders to limited companies, the biggest challenge we've always seen post GFC and this pandemic is the lack, the availability of reliable data. While we've got credit scores, we've got data in the bureaus, as Emma said, we've shifted to a completely new ways of working, and that data no longer seem to be reliable. SMEs and the relationship with banks changed post GFC. So affordability was always aligned to different price points. So you've got the banking products which are low interest rate and potentially affordable to SMEs, but the banks are not willing to lend because of the loss given default and propensity to default and Basel III norms. And therefore, when they come to a alternate finance lender where we played a kind of a broker role, it is looking at the different eligibility and affordability criteria that each lender has, and there are multitudes of those. So you go to one lender, let's say, who's one of the leading lenders here, they'll have their 10 criterias and rationale on different leverage ratios. So you have to really have a complex affordability calculator or assessment engine to look at that. And then the acceleration towards a digital shift kind of changes everything, because now you're looking for real-time data, because whatever data you had from bureaus was helpful, but that's as of your last management accounts, and which was last year's, which doesn't help in the current situation. So the challenge we've really seen over the last 12 to 18 months has been the shift from static data to more real-time data, and more importantly reliable data, because the 6 C's of SME lending, being character, capacity, capital, collateral, conditions, and credit score, right, all need to gel together to then match what is actually affordable, because even if it's affordable, you may not will lend. So it's taking all that and putting it together in some kind of magic cauldron to decide what kind of product needs to be fit, whether it's a merchant cash advance, whether it's a term loan, or whether it's something like factoring. So each of the affordability engines are different, and in our implementation we've used your solution, the account score solution, and Kodat as well. So there are various engines we've now put into real-time practice, and we can cover that as we go on. But it's
absolutely, I absolutely love your articulation of the 6 C's, and it sounds a lot like the 3 C's that we talk about in Digitalytics, which is the completeness, correctness, and consistency of the income information that feeds into the affordability service. So great to hear from across the segments as to what the current challenges are. Before we jump into the next round, could we do a quick survey of the attendees to see, did we capture all of the key challenges, or are there others? So if you could just take 30 seconds to click on one or more of these, we will take away your information and provide them back at the end of the webinar. Okay. Wonderful. So then moving on to, so how really has the pandemic exacerbated this, and what do you expect, given that we are all going to live now in a new world, and we're acutely more aware of events such as the pandemic, but there's more uncertainties coming down, not just in this year, but as Brexit matures, and we, the UK settles into a new trading arrangement, I think the economy is going to have different sort of dimensions impacting it. Emma, if I may just go to you and ask you about, what are the biggest things you saw from a change that the pandemic has brought about in this area, and what are some of the expected changes you're seeing over the next couple of years?
Yeah. Well, if I touch on the data in the first instance, so immediately you saw changes in spending behaviours within the data. Things like Amazon spend going through the roof, and travel and holidays absolutely falling off. And so it took, and we also saw our consumer lender clients, which is predominantly what our base is. They obviously pulled back from lending in the first, I would say 3 months of the pandemic last year, and whilst they figured out how do we actually lend through this process. And whereas historically they may have used our platform if it was a marginal decline or a referral, actually the real-time value of the data, along with the insights that can be provided in and around seeing the spending behaviours and the actionable insights, is somebody furloughed, that became critical. And so what you've actually seen is it move right up front in a lot of the journeys and become a mandatory process. So what that's meaning is the consumer is now starting to become familiar with this process of consenting to share their data in order to receive a product that otherwise they may not be able to receive based on the data that's being provided to the lenders. So I think on that sense, it's been incredibly positive to see that. I think that there is also the elements of where the pullback happened in the market. What we always sort of talk to our clients about as well is, just because the markets have shifted, there's no arguments around that. We've seen some terrible things happen to organisations in the last 12 months. a lot of businesses have actually been able to adapt, account score being one of them. I used to be on a commute to London every day, and I've sat in my home office now for nearly a year. And we have carried on and had that luxury of being able to carry on as normal. So for when consumers have been applying for finance and lenders have felt more nervous, it's been important to also give that reassurance to say, this person, look at them over the last 12 months, they still look good. And it's about giving those sort of comfort factors in there as well. And I think that's been the main thing that we've worked on, ensuring that we have any of the sort of like COVID related flags, and that's on the consumer or the SME lending side, but then watching the patterns emerge. Another big pattern that we've seen is the increase of buy now, pay later transactions happening over the last 12 months. And obviously that's incredibly relevant right now with the report that was out last week with the regulators. So, that fundamentally to me still comes back to the point of affordability is key. There is no more powerful real-time data source than the bank transaction data. And whereas lenders historically have just been told, do better, at least now what's able to be provided is the how. And so I think that's something that we should be, immensely proud of and just be really encouraging, for use as it continues. And I think it's gone from a tactical solution for a lot of lenders to being something that is now strategic and just fundamentally going to be part of what they're doing moving forwards across the board.
Absolutely, and it was great to see that account score that does an incredible job of classifying on the expenditure side, what's essential, what's not essential. And post-pandemic, I think a lot of those behaviors will change. Even though the FCA is providing guidance on the categorization, I think as when more data feeds into your AI engine, I think you'll see the classification of the expenses side sort of evolve. And that sort of leads me to good, from David. This is probably much more highlighted and acute in the mortgage sector, where lending tends to be longer term and bigger, higher tickets. Have you sort of seen similar changes emerging?
Yes. Well, the pandemic has obviously posed big challenges for lenders, brokers, customers, everybody. And what you do have to say is that the whole mortgage sector has worked tirelessly, I suppose, to keep on top of the changing market and the challenges that have been faced, and particularly dealing with customer needs. Every part of the process has been real challenges for lenders and brokers, not least lenders working through the capacity and operational challenges of trying to get underwriters working from home, which is a massive issue. It's definitely accelerated the needs for new technology, and it has prompted lenders to look at implementing much needed innovation. And one good example of that is, I suppose, the greater use of AVMs in the market over the last few months, which has really helped the market significantly. A number of lenders have used the likes of chatbots a lot more to improve the whole integration and the process journey of communication with customers. So you can see a lot of that. But what is really clear is that the number of customers who fall into what you'd call that non-vanilla bracket, for want of a better expression, has increased significantly. So that's got you to a stage that, whilst the digital services and technology absolutely provides the efficiency and the transparency and takes away a lot of the heavy lifting, the changes that we're seeing in societal sort of earnings patterns as a result of things such as furlough, challenges on self-employed people, different types of challenges, what parts of the industry, what types of industries you're working in, all that. So a result of all that means that just straight through automated decision making will not be appropriate for everybody. But it does put the challenge back on this issue of the increased complexity of the affordability, income assessment, income and expenditure assessment verification process. So lenders are looking at and trying to involve more manual checking to ensure that fair customer outcomes are achieved, and at the same time satisfying lenders' risks framework. So I suppose there's even more need now for human involvement in many ways, but that human involvement needs the help of greater technology, and that's where artificial intelligence, for example, can really help massively with that. You've got a number of different challenges that the pandemic has led to. I think, as Emma has referred to, around even different payment trends that you're seeing in the market now. Spending more time looking at the types of industries that employees are in, looking at the sustainability of income and trying to predict that. So those are all the sort of challenges that are out there at present, and definitely that greater involvement in specialist lending is becoming even more of a trend as we go forwards. Yes, of course, you see some great examples of how lenders are still managing to achieve really fast turnaround on cases, and speed to offer in some cases is still excellent, but there's that greater need to look at how you can support specialist lending in terms of looking after those non-vanilla type customers.
Absolutely. And just before I go on to the SME side of things, both from what Emma and you were saying on the residential or on the consumer side, it's one is getting great information from bank statements and trying to analyze that, but lenders also need now to understand the breakdown of that, because as you were rightly saying, we were speaking to a lender who said that the minute we see a furlough entry on the payslip, it's a flag, and that doesn't necessarily show up in a bank statement or an open banking feed, but they do need to look at it from a payslip standpoint or other income detail. Now the challenges have never been greater on the SME side, Madhav, and till now, and hopefully for the next few months, we will still have a lot of government led support through CBILS and BIBLs. But what in your experience has been the biggest change, and what is the change you're expecting once the state stops these schemes?
I think way back in March, when we suddenly were waiting for government to give a view on their strategy and how they're going to intervene with the BIBLs and CBILS loans, from June onwards, we saw a shift in the ways in which we managed customer journey. So the impact was in three areas. If you look at it, you've got the customer journey, which is how we engage with clients and walking them through the whole process. Then you had the whole product mix, because everything then was shifting from traditional products to a CBILS or BIBLs, because that's what people were looking at. It was the most affordable product in the market at that point in time, subject to certain criteria, but many people were left outside that, so we can come to that as well. And then the third element was actually processing these things at pace, because the criteria was changing on the fly, dates were extending, and you had different things coming in real time. So, we were really trying to shift our ways of working into a digital mode, so get everything digitally. And we had the same kind of team size, so you had to use tools and technology to automate and extract that. Customers were not comfortable with that technology in terms of asking them to apply things in online form or sending things in digital formats, and making sure the fraud element is taken care of. You're doing ID&V and all the good stuff. And then making sure once you receive it, that all the information and conditions that are CBILS or BIBLs products, essentially more CBILS for us, the customer provided all the right documentation and information required to be eligible for that. So the eligibility element came in, and then you go to affordability, because once the first two hurdles are done, then you can actually check on affordability. And there it was, how do I get access to bank data? How do I get access to statements? Customers are sending things. And if it required our team to go through, hundreds of pages of documents and put that in, many times we saw that customers were not eligible or they couldn't afford because turnover had dropped down to 30%. And the sharp impact was seen in sectors. So traditionally, if you look at a popular product, which is merchant cash advance or BCAs, is in the restaurant sector or pubs, right? They were always doing good business. In a traditional model, would have gone, they would have got a loan. But suddenly the volumes have dropped to less than 30% or 40% of the last 3 months. Then how do you define affordability? Because lenders lend 30% of your annual turnover. Now, in the last 12 months, we've seen some of that change. How do you factor that in your calculations? And you should have done at least 40 to 50% of your regular turnover. And you go back to bank statements, or if it's invoices or your cash accounts, do I get access to my receivables? Do I get access to some particular information or data set that can give us assurance of future payments? So those are the things we've started to observe during the pandemic. But these are, I think, fundamental shifts now in way affordability will be assessed in the future, because you don't know when the next one's going to hit. So how flexible or agile is your affordability or eligibility infrastructure there to adhere, match these changing times? And we've kind of gone through the whole 12 months now in bringing our infrastructure linked to real-time data sets. And, that I think has been the biggest change of all.
Wonderful. Very good. So, that's a good sort of cross section of the challenges that we're going to expect over the next few months. Before we dive into the final round, I'd just like to do a quick second survey on the key challenges that we spoke about. Does the audience, do the attendees feel that we're talking and we're addressing all the right challenges that will impact affordability? If you could take 30 seconds to click one or more of these. Wonderful. Onwards and upwards. So we spoke about the challenges that have been there, always been there from an affordability standpoint. We've seen the challenges that are going to come up and the changes that we're going to come up. As I spoke about, the four biggest obstacles to having a finer or a more granular affordability engine was GDPR, all of the uncertainty in the economy, the cost, and last but not least, technology. The intelligent affordability service that has just been launched by Digitalytics and Account Score takes a very, very big step towards addressing the technology challenges. The affordability service is the only one today in the UK that offers a consistent customer journey, borrower and broker journey, whether you get consent from the borrower or the borrower provides you a documentation, so documents like bank statements and pay slips and P&L statements. The service is able to extract all the relevant information and then provide it in a very, very easy to use way to classify all of that information on the income side and the expense side. And you can use your own what if simulators to be able to do predictions of what the affordability might be like. And in the roadmap, there is a plan to start doing predictive income, so to provide models that will be very, very granular and start providing sort of predictive information on how the affordability is likely to trend over the next several quarters and years. But let me start with you, Mohammed. You've now implemented the service, and always the proof of the pudding is in the eating. So can I just go to you first and ask you about what your experience has been, how it has helped you as an organization, and where would you like to see the service go?
Sure. So I think, as I mentioned, we started the journey way back in June, and originally, we were looking at using open banking and as a model to really look at real-time data. And one of the key challenges we found was consent, as you said, in terms of GDPR, and even SMEs not having access to bank accounts, or they had accounts which were not part of open banking. We still have those in the UK, by the way. And therefore, we said we need a solution that can do both. So you could either have open banking consent, where you can get data over the last 3, 6, 12 months and analyze that. And we tied up with account score for that. But given the fact that we also needed technology to look at bank statements, we needed a robust extraction and intelligent engine that could do the same job that open banking is doing today with the banks. And while implementing that, we found a lot of capabilities within account score that are linked to categorization, classification on income and expense, right, need to be linked into what we would do on the bank statement side, or for example, in cash advance on merchant device payment data. So how many payments are they processing on a daily basis? So we looked at a solution that could do both, and the dashboards that we've got in account score that give us all the cash flows and the predictable views on categorization helped. And from Digitalytics, we looked at the robust engine of doing extraction from a variety of statements, about 10 most popular banks, plus we've got the US kind of payment data that we plugged in. So it was both for the UK and US that we had to find a solution that meets both. And US doesn't have open banking yet. We've got Plaid and got the others, which are more aggregators, but not open banking as a standard. And my challenge was to look at a solution that could fit across these two markets. And we found a robust solution in these two platforms. And to our funding managers or funding specialists, we're now able to give a consistent view of a merchant's income. So as in cash flows, and what are regular cash flows, what are regular expenses in terms of taxes or other direct debits that they've got, or any other loans or charges that are existing on those loans. So we had to get to a really low level of detail to understand what kind of data was coming in, and then make sure it was classified and shown accurately. So that took some time. The learning experience was there. Hopefully with one-shot learning now we can get more and more types of documents coming in. But I think all in all, the ability to assess hundreds to 150 pages of statements at within 3 minutes, as well as the ability to pump that into account score and get a dashboard view in probably another 30 seconds to 40 seconds, I think is making a huge difference to our people who can engage with the client and say, here's what your data tells us, and here's the story of therefore who you can go to. And most recently, just in January now, we've launched that same capability to our end customers, where they can get this view themselves. So it's really a now powerful tool for customers to manage their own finances, because SMEs don't have that financial literacy. And I think with open banking, with what we're doing here, I think that's going to be a game changer in the future. But yeah, it's really been, I think, a transformative journey so far.
I think one of the biggest anecdotes or benefits you mentioned when we were implementing this was, one of the underwriters. So when an underwriter needs to look at a case which has got 150 or 200 pages of bank statements, after the first 50, he pretty much loses the will to live, because he just can't troll through all of them. And this is across the industry, people would just go through a few maybe 1 month statements and then make assumptions around what is the information in other statements, whereas now they get a much more accurate and a much more granular breakdown of the information.
And key metrics like Arindam, largest credit per month, or number of credits coming in per month, or debits, any variations that you're seeing to those. I think that's really giving us more insights into that data, which going forward will only expand, because you've just got banking data. Going forward now, you've seen Cabbage and some of the the lenders in the US shifting to looking at online data, so e-commerce data, because all our SMEs now shifting to an e-commerce based model. So you're going to look at in future affordability to include data from external sources on how many likes you've got, or in terms of what kind of order profile do they have, and those things will now be included to give integrated views on. The regulator has a different view on that. at this point in time. But,
absolutely, and I'll come shortly to the regulator point, but just to add on that, as part of the roadmap of this service, we're now running trials with Hmrc and with partners like Kodak, who are providing additional information. So while you get bank statement information from Accounts Code, there are additional financial or affordability related information that you can now feed it, and exactly the same principle of the single journey is going to be extremely powerful. But let me not stop there. Emma, you've probably seen the implementation of this across, as you said, 180 clients and across sectors. What in your experience are the biggest benefits and probably the biggest barriers to organizations adopting the service?
Yeah, absolutely. So just to say, actually, with regards to the Intelligent Affordability Service, and listening to Madhav, I think there is a real beauty in the fact that actually what you're doing is you're putting the customer in control, and so that customer then has that ability to say, right, okay, oh, I'm super techie, fine, I want to thumbprint in and do my information that way. And the fact that you're giving that ability for the customer to be empowered and make that choice, I think that fundamentally is what the root of open banking was supposed to be about, and it's great to see that that's being carried through and delivered. So it makes me feel really uplifted that that's happening. And then I think that in terms of the barriers to the market, it always, I think, comes down to deployment. I am historically from the consumer finance space, as you know, and I was very, very used to an automated decisioning world when we started Account Score, and it was a shock to me that there was so much manual underwriting that still went on outside of mortgages. And I actually had no experience in the SME lending sector whatsoever. And so, when we started looking at business bank accounts and seeing, well, actually, categorization doesn't really work on that. It needs to be more around classification of the data and understanding cash flow. And, we spent a good sort of 3 years really working on our skills, in that area, and combining multiple data sets to make it valuable. So I think one of the barriers I initially came up against was this lack of desire to automate, and so that was a pretty steep learning curve for Team Account Score to say, okay, what do we do here? Which is why we created the dashboard initially as a proof of concept to say this is what you can pull in from an API, and it's actually become something that really has got the organization kick-started, because many people just wanted to test and learn in the first instance before committing to do an integration. And so that's been something that's worked incredibly well for us. I think that there are always multiple stakeholders to deal with at organizations when they are implementing something like open banking. So you may have the buy-in of the chief risk officer, but if you don't have the buy-in from the tech team, your development ticket is going to be number 150 in the queue as opposed to number 1. And it's about really showing that the affordability from one API call, you can have multiple solutions in there that covers a whole vast range of things, from ID, creditworthiness, affordability, that ongoing insights on the recurring data, and really getting that buy-in across the board. And so but for the larger organizations, deployment is always the biggest challenge. Working with the banks, a lot of times they're planning their business cases a year in advance, and everything shifts. We've learned very quickly as the globe now that everything can shift on its head overnight, and so the deployment piece is always the biggest issue when it comes to open banking data, I think.
Yeah, absolutely. And I think the fine balance in deployment as to when you're designing the new journey, you don't want to try and put so much automation into this that the underwriter's sort of experience and decision-making ability is challenged. So you need to sort of empower and enable the underwriter to be able to do the more decision-making oriented tasks easier by
I agree. It's completely about respecting being able to enable them, empower them, but having that respect, therefore they are highly skilled at what they do. What I have is an engine, and it's a highly intelligent engine, but it does not have 30 years of underwriting experience when looking to make a decision if I can afford a mortgage.
Yes.
I think another key point, another probably key word here is for underwriters is the confidence as well, is providing them with an even greater confidence in their mandate application, and ensuring that they know that the data they've got in front of them is really accurate. It leads to more consistency in decision making. It absolutely gives the underwriters even more confidence, because we are, as I said earlier, the industry needs underwriters to be making probably even more complex decisions from time to time now as we go forward, and the confidence that they have is crucial. I think, as Matt have said earlier, we don't want them all losing the will to live. That's the last thing we want.
Absolutely.
So,
Yeah.
so confidence as well is key. You know, showing that the use of AI, for example, to have the ability to extract data from documents, cross-reference that data seamlessly with third-party providers' information, absolutely leading to much more consistency in decision making, and arguably even greater accuracy in decision making. I think is one of the key features of this. And as you look at a lender process, at present, as we've said earlier, one of the key challenges is just the high level of documentation verification items that you have to send. Broker sends to lender, broker even has to send to solicitor. So all that's key and crucial. It improves the overall consistency of decision making, and just leads to a greater overall level of consistency in approach.
Absolutely. Well, unfortunately, we are rapidly running out of time, but thanks to all three of you to talk about the service. We'd like to do a quick third survey around this round of discussions, but just before we launch the survey, could we also request participants and attendees to send in their questions? There's a Q&A box in your at the bottom in your panel. If you could just type in your questions, we will put them, as many of them as we can, to the panelists. With that, Ishani, if you could just launch the third survey quickly. Okay, wonderful. So we've got a few questions out here, and I'm probably going to go to you, David, and Emma with the first, with probably the one around regulatory acceptance. So from a regulatory acceptance standpoint around a service like the intelligent affordability, what are some of the big challenges that you may see the FCA or the PRA raise? We have detailed explainability reports around the models, but it'll be good to hear your views. That's what participants asked for. David, did you want to lead first?
Yeah. So I think one challenge is that as whether AI technology or open banking matures and take up increases, and also the availability, I suppose, of third-party data out with open banking, such as other feeds, improves. I think what it will do is demonstrate and lead to improved accuracy levels, and be able to demonstrate improved accuracy levels of the data, and ultimately, therefore, the I suppose the income and expenditure verification processes, and I think that's really key. I think one key aspect of all this, as we've said before, is ensuring we get really accurate decision making on a consistent basis, and I think that's one key benefit of this. for everybody in the customer journey.
Yeah, absolutely. And you know, just to add in there, this question around accuracy is so critical. We're actually in Digitise working on an Innovate UK funded project where we are being able to now guarantee 95% plus accuracy on the extraction of information from all of these documents. Emma, anything to add to that
I mean, from my side, I think you know, alongside that we know the FCA is not neutral on open banking. They're actively encouraging organisations to use it, but in and around open banking solutions, it's fundamental that there is governance there. You know, and so I think that is what all third-party providers or AISPs, you need to ensure that there is a strong governance process, because it is our regulatory license. When we are accessing that data and presenting it back to our clients, and so you need to ensure that there is governance there in and around your accuracy of the data, the insights that are being created on it. Is your income verification accurate and on point? And all of that is fundamental to ensuring that confidence is gained across the financial services sector in this data. Everybody agrees that having the data is great, but ensuring that there is a strong governance behind it all is critical.
Wonderful. I'm going to club together the next two questions which have come on open banking, and Emma, probably lead with you. So there are two questions, one from Stuart Holland and the other from an anonymous participant. It's around the FCA's guidance around increasing the uptake around open banking, and we've seen that lending products and lending has always lagged in open banking. So what kind of initiatives is AccountScore taking, and what can lenders do to increase the uptake? Combine that with how do we make sure that consumers feel safe when they're providing the consent? And I know AccountScore does a tremendous job of this. We are seeing that open banking is a smaller component of consents when it comes to lending applications. But Emma, great to have your thoughts on those.
Yeah, absolutely. So in general, my view is that consumers don't need to know that open banking exists. You have to think of it as an incidental part of the customer journey when they are applying for a financial product. I very much back in the day thought of it just like 3D Secure. We've got used to going through those kind of processes when we're doing our Tesco shop online and things like that. And so I think the more that it's visible, the more consumers get comfortable with it. However, as a consumer, I always think of us as like little data vaults carrying around all our data, and consent, I think, is key. And globally, consent is not something that's going to be going away. So as long as you can empower that consumer and ensure that they have control over their data, and they can choose that if they have chosen to share it on a recurring basis, they can withdraw that consent, or that they can continue to share as they desire. And as long as that communication is going back to the lender, so the lender is also aware and understands if there's been change of circumstances, I think that's a much more sort of joined up approach. I think from a regulatory standpoint, and I mean, it's probably typical that as an open banking provider, I would say this, obviously I look at it and say, it's the fundamental part of affordability. It's real-time bank statement data. Nothing gives you that real-time view than anything else. So the FCA could look to make it mandatory across certain sectors. I don't think they would do it across all sectors, but there has to be the ability to. I remember doing consumer lending when we used to get a 90-page bank statement faxed in when fax machines still exist, and we wrote really good loans at that point. And I think so, thinking back to the old school but marrying it with that new technology, with the regulator as a driving force saying this needs to be used for affordability, within these sectors will gain that, get that momentum. And we've definitely seen a shift in the momentum over the last 12 months. The traction is in the market. It's just getting that wider adoption that needs to happen now, and that increase in the utilization of it by organizations.
Yeah, I would also add that, what we're finding is when it's an intermediary-led journey for the lending application, brokers are not very, very comfortable with providing direct access to borrowers between the lender and borrower at the stage of application, and we still haven't solved it. So we have a good solution in the affordability service, but we haven't solved it completely, where you're allowing brokers to sort of prevent the lender from having direct consent and keeping the broker in the loop.
And just sorry.
Please go ahead.
Go ahead.
First, and then Madhav.
Yeah, no, I was just going to pick up on that, and I think that that's a good point. I think that you're seeing increasing take up from brokers, certainly mainstream residential buy-to-let lending. You're seeing more solutions out there to help them with that, and I think there is an increasing take up. I think it ultimately boils down to understanding that aspect of the customer journey that they have as well can actually help them achieve that great customer outcome goal that everybody's trying to achieve from the start, in helping, for example, have a much clearer understanding of the customer's income and expenditure picture right from day one. That helps them in terms of approaching the right lender, etc., etc. So it is a challenge, but it is one that I think everybody can work on much more over the coming months and years, and ensure increasing take up and greater understanding as to how that can really help with the ultimate customer outcome.
Absolutely. Madhav, just before you answer the last part of this question, let me just tag on another question, which I think is going to be very interesting for you to answer. Somebody's asking about the level of categorization available or the granularity available in the service. So just based on your experience, if you could answer both of that. Yeah.
Sure, I'll just continue the last question and I'll come to this one as well. So I think one of the key things we've seen in terms of increasing adoption is providing optionality, because today it's open banking, tomorrow you go to open finance. There's a lot more data that's going to come into access to lenders as well as intermediaries. And from an intermediary perspective, what we feel is definitely lenders kind of latch on into data sharing agreements, because you don't want the customer to give consents multiple times when they're applying to one or more lenders. And I think that's one of the things Account Score does, again, beautiful. You could exchange keys and, the lenders can go and access the same information. So customers end up giving consent only once, but, you can share with multiple lenders. So I think that definitely is one of the success criteria to increase adoption.
Okay, that's great.
Coming to the other question in terms of granularity of categorization, when you look at SMEs, and I'll speak from an SME lending perspective, you're looking at different transaction types. So your typical payments to your rent, you're looking at as a business owner, you will have additional regular expenses on salaries as well as other creditors or suppliers that you have. So you can get down to supplier type and supplier category to look at a classification at that level. You can also look at classification around all payments due to government bodies or taxes, and whether you've got tax credits. So you can nail it down to what kind of VAT payments have you done on a monthly basis, go down to any credits that you're taking on that basis, and then net it out. So the data is as good as what you can get from a banking statement, but if you combine that with other documents, then your categorization is a lot more powerful. But I think we found it useful to look at 3 or 4 key categories around vendor payments, around government or mandatory payments that they do, and of course other monthly regular expenses. So hope that answers the question.
Wonderful. Thank you a lot, panelists. Unfortunately, all good things must come to an end. So we are already on the top of the hour. So we will bring this thing to a close. There are a few still unanswered questions, and we will follow via email to respond to those. Just before we let you go, we'd just like to talk about the next webinar, which is now scheduled for the 18th of March. This is going to be on what we call first-time right applications. So if you see the number of average number of application submissions that any broker or borrower does to get one loan, it's about 4 in the UK, and the analytics technology allows it to be brought down significantly and make the application complete, consistent, and correct at the time of application, which will be a very good topic to talk about in a month's time. We haven't finalized the list of speakers yet, but it'll be equally illustrious. So I look forward to having all of you back on in a month's time. Once again, thanks a lot, panelists. Thanks a lot, attendees. Thanks a lot, Ishani, for arranging this. It's been great to have you. It's been great to have the discussion, and we will speak to all of you shortly again. Have a great evening and a good night.